Right now, crypto is dumping, stocks are bleeding. So the question is, did crypto top out, or is this correction setting up for the next major run in the bull market? Last year, I showed you guys exactly how I was deploying about $250,000 into the market. So I'm going to give an update on how that's going, what has specifically changed, and how I'm sort of adapting and navigating this current pullback. Because even though there's a drop, a lot of the end of cycle signals are not in yet, which could be signaling a bigger macro setup that is still yet to happen. So in this video, I'm going to show you how I'm reading the current market situation, the results of following the plan that I put together and shared in 2024, and then where I stand right now, my strategy updates, and all of the new positions that I'm setting up right now. So this is basically an update video so you can know exactly how I'm positioning for the next move in crypto. All right, so let's take a look at where we are in the current market situation right now. Bitcoin over the past 6 weeks has fallen by over 27%. The Dow Jones closed at nearly 5 points down. Everyone is afraid of a potential AI bubble and overvalued markets. And largely, a lot of this fear is geared around the economic slowing as well as the weird resemblance of where AI currently is compared to the dot-com bubble. With OpenAI investing into Oracle, which is getting invested into NVIDIA, with OpenAI also investing in NVIDIA investing into OpenAI, and sort of this rat nest cycle on the future speculation and success of AI, driving crazy valuations like $500 billion only making $12 billion. Now, in companies, this isn't weird, but it does beg the question if things are overvalued right now and what that's going to look like. Additionally, when the US is somewhat fragile, dealing with cost of goods and services going up and the economy slowing down. Additionally, on the crypto side of the house, we are now at a 15 on the fear and greed index, which is near the fear state of where things go when we are either in or headed deeply towards a bear market. You can see a majority of the cryptocurrencies have had substantial losses over the past 90 days. Only a handful of these cryptocurrencies having gains over that time, with the altcoin index around 25 out of 100 right now, also in this lower parameter. Additionally, if we look at Bitcoin as a whole and tracking off of the Bitcoin halving cycles, you can see historically the run up until all-time high has been about 530 days. You'll see from the halving here to the all-time high falls within the same week to 2 week period. Going over to where we are right now, 532 days out, is basically when we saw that last push to the high, and now we're selling off the way that we have seen the previous cycles end. So we are framed sort of in that mathematical cycle end. This has caused me to do a few actions based on my plan, but I'm going to get to that in a little bit. Okay, now this could seem like it's definitely not a good sign for the bull market continuing, but there are some other promising elements, and so actually some really good analysis that I think is hyper bullish. I'm going to be explaining it sort of in detail. This is something that most people don't fully grasp. A lot of people think that crypto is just getting adopted and that's why everything is going up because of the cool technology and the implications moving forward. However, what we've been able to figure out is that Bitcoin is actually the best representation and showcase for the amount of liquidity that there is in the system. M2 supply is basically money supply. What the Fed does is basically drop interest rates, issue bonds, which effectively creates more money into the system, makes it cheaper for money to be borrowed. It makes fixed percentage returns less appealing on an institutional level. It makes the risk on appetite for the global market as well as the US market higher. And crypto, being an emerging market, is the first one to see that, and Bitcoin, being a store of value, is one of the first ones to see that speculation. We can see the global M2 supply and the Bitcoin price are extremely tightly correlated. In my opinion, here is the interesting part. We have seen global liquidity forming a long-term downtrend over the past 1.5 to 2 years, right? US liquidity, same thing. And generally, we have seen the US stock market continue to rip all-time highs aggressively, as well as Bitcoin continuing to move up in its cycle, despite the strong correlation of the liquidity and the fact that liquidity has been consistently moving down. So yes, we are where we are in the cycle, but Bitcoin has been relatively resilient to the fact that global liquidity has been dropping and continuing to make its move higher. So this is going to get a little bit deeper here in a second. Now, the primary thing that I'm sort of thinking about is if we are potentially in an overvalued state in the stock market, where we've been basically consistently moving up, if we are to have a correction or a pullback of any serious matter, okay, the government, especially now, is effectively forced to drop rates to stimulate growth in the economy, which is then going to make risk on assets more enticing. What it will also do, from what we've seen in 2008 as well as during COVID, is it basically forces the injection of global and US liquidity, which is the primary driver to massive influxes in crypto. And you'll see it slightly lags behind. Increase in liquidity, Bitcoin follows. So in my opinion, that's one scenario. scenario, if the market sells off, the monetary policy is basically forcibly changed, which is, yes, for the short term going to negatively impact Bitcoin, but it's basically setting the stage to be able to capitalize on massive upside opportunities. And the fact that it's been so resilient so far leads me to believe that this actually could be a much more massive move. It's really important to understand the relationship between stocks and Bitcoin historically in order to capitalize on these situations, okay? Because it always seems like when the stock market sells off, Bitcoin and crypto is supposed to be a store of value. Then how would that be a store of value if it's selling off twice as hard as the stock market? Here's the thing. Bitcoin has what's called a higher beta coefficient than the stock market, meaning that when the stock market negatively reacts, it reacts to a certain factor greater. But the same is true on the flip side, and we can use this as sort of an indication of which stage Bitcoin is in. Is it a speculative multiple vehicle of risk on assets, or is it in a stage where Bitcoin is looked at as more of a preservation of value as the M2 supply increases and as money gets cheaper to borrow? So let's take, for example, when stocks move up 5%, Bitcoin moves up 10%, risk on. If the stock market has a 10% sell-off and Bitcoin sells off 20%, we're seeing that high beta coefficient and sort of all of the fresh speculative buyers getting flushed out of the market. When we see a continuation, say for example, a 10% sell-off in the stock market, and then after we only see, say, a 5% sell-off in Bitcoin, right? It stops being so responsive to the negative price action in the stock market because it's more and more of the long-term convicted holders of Bitcoin than just the short-term holders temporarily. Which means on the opposite side of that, when stock market recovers even 5%, now we can use this as a switch signal when we see Bitcoin responding less harshly to negativity in the stock market, that any sort of upside potential could lead to a massive upside opportunity in the start of the next move in crypto and in Bitcoin. So understanding this relationship and that this has been proven with data is important context. Okay, additionally, what we have to remember is if we forward play AI 10 years, 15 years, a lot of the manufacturing, coding, trading, investing, money management, a lot of these AI developments are going to lead to massive increases of efficiency in this market. Right now, there's a lot of inefficiencies with people working 9-to-5s, taking weekends off, making clerical mistakes. With AI taking over, they're going to need a verifiable, immutable way to program scarcity, as humans have been doing with gold primarily for thousands of years. We look, Bitcoin is $1.8 trillion asset right now. Gold is $28 trillion. If we look at the market cap of Bitcoin at the levels that gold is right now, that is a 15x in the price of Bitcoin, bringing the price to 1.4. And that's assuming that the total money in the system doesn't explode with the development of AI over the next 10-15 years. If we are to get a continuation of the sell-off, that's a 15-20x multiplier of wealth that could also be amplified into the alt cycle if we have a proper strategy to be able to read these cycles and deploy capital effectively. So at the end, I'm going to update those plans and show you what I'm specifically doing. But first, I want to go over the results of the plan previously and show you where I'm currently at. So the plan that I laid out involved having a casino portfolio for the risk-on cryptos and a core portfolio for the safer, larger cap cryptos, and basically deciding between high, moderate, and conservative portfolio styles, in which case there would be consistent contributions with a 10% reserve allocation each month starting to be built to be able to stop contributing to as we enter the end of the cycle. So you can see this plan a little bit in more detail here. We have our core portfolio, which is medium and low risk cryptos. And I laid out basically different percentages with quantities of cryptocurrencies, which could be decided between a core portfolio and more aggressive portfolio styles. And what I set up to do is contribute monthly into that designated area and make sure that the casino portfolio stops getting added to when we're nearing the end of the cycle. Now, the strategy was to look at Bitcoin as the North Star of this process, do wave analysis on Bitcoin, which I explained in the previous videos, and look for parabolic moves into 161.8 or 261.8 fib projections. And if any of these criteria were to hit and we got a hint of a potential end of cycle, that's where I would be selling all of my mid and low cap risk on cryptos and holding that into the cash reserves. Okay, additionally, I said that I would never be selling my Bitcoin again for the growth potential reasons compared to gold that I just outlined, which, if that happens, can happen very quickly and can dwarf all of the analysis that we're doing right now if there is a major reason or a need for programmable scarcity that is more verifiable and immutable than gold. If you want to go back and watch that video, I'll put at the end of this video as well so you can reference the plan that I've laid out in more detail. Okay, that being said, this is where I outlined some of the cryptocurrencies that I found value in that I called out into these designated categories based on their market capitalization or their size. Now, this was under the assumption that we would get a traditional massive bull run and open ourselves up to that upside opportunity. What's important to remember in investing, what I've found is about protecting your downside and making sure that that you're going to be comfortable in your decisions and okay no matter what, while also opening yourself up, if it's the case, to capitalize on massive moves up. Okay, and being a day trader, this is the same exact logic that venture capital uses, that traders use. You have to be able to open your upside while minimizing your downside, and if you do that over time, that's how you're going to end up in a favorable position. Okay, you can see when I enter into a day trade, I have my risk contained, so if I'm wrong, I get out, which is the opportunity cost to be able to take advantage of where I think the market will move in my direction, in which case I've only risked $1,000, but now I've been able to make $3,000+ in profit. With the assumption that a lot of these cryptocurrencies are not going to work out, we have to position them into these high risk categories, diversify across them, and know what we're risking to be able to take advantage if they end up moving up by a ton, but cut our losses down if we end up being wrong. So I'm going to show you how the moderate portfolio performed. Okay, and this is really important. Okay, I've been calling out Bitcoin for a long time, but this is where I first mentioned the portfolio, and this is going to be the start period for all of these things, right? So that you can see this is a 1.84x on money risking off of 0, which once again, same way as trading, this is our risk factor. Ethereum from that level, break even. Solana from that level, but from the end of the Bitcoin halving, was about 4 risk factors. Even though Doge ripped like crazy, it was at one point up 5x. Okay, ended up being about 0.9. Ondo, small loss. Tau, about 4.6 at the end of the mathematical cycle, about 3x up now. Near, from where I was talking about it, basically a negative 0.75 R. Okay, this did not perform at all, which once again, this is just what you have to accept as an investor. Aerodrome was super bullish on this. We got our nice move at one point, but at cycle end, break even. TIA, this was probably one of the worst ones. Okay, there was so much hype with this internally with Coinbase, full negative 1 R. Okay, SQD was a really good call. This is where I called it down here. At the Coinbase listing, we had about a 7 or 8x, but at the cycle end, it was about a 1.5x. Grass, about a negative 0.5 R. Ionet, basically a full loss. And Bless, which was one of the companies that I was really excited about, getting in at the 78.6 level, which is what I talk about in most of my videos, risking off of the launch low, went up a 9x at one point. I'm not going to consider this in the calculations, but just to sort of showcase to you, across 4 cryptocurrencies where you have a negative 1R possibility to the downside, and you get a 19x, you've now 2x'd your entire risk over that group of cryptocurrencies with only one of them playing out. So on the moderate portfolio, here were the totals. Core gained 0.84 R. The mid only gained a small R, so basically break even, and the total portfolio went up by about 1 R. So the whole portfolio basically went up by about 1x. Considering we could have just put all of the money into Bitcoin and gotten a 1.85x, that's obviously not the best outcome, right? The cycle didn't play out how we were expecting. However, the goal of positioning like this is now to be able to have capital on the table to follow the opportunity to be able to deploy into the next stage. Because once again, if we can look in time, these areas and not be exposed and underwater, when crypto is moving up, say 2 to 3x, a lot of these other finds can go up 5, 7, 10x, which is a strategy that I've used to dramatically grow my portfolio, especially dealing with smaller values. Okay, and that's why on October 28th, right here, I updated everyone on my story, as well as on the private side of my trading team, that I was selling out of all of my high and medium risk cryptocurrencies and going out to cash. Because if we're able to have the capital for the high risk investments allocated only during the mathematical cycle lows here, where the volumes are dead and there's no activity, if there's any momentum in the crypto market at all, a lot of these cryptocurrencies can go up 5, 10, 15, 20x with your more high risk things. But if we're wrong about timing that, we still have exposure to be able to capitalize on the main players that if also tank are more likely to rebound over time. Okay, and I've been dollar cost averaging in with this plan. Once again, yes, we didn't have the crypto cycle that we were looking for, but still was able to annualize about 13.5% and outperform the S&P 500. That way, if we do have upside in the cryptocurrency market, and if I can take advantage of these drops in the cycle, I should be able to well outperform the S&P 500 until the market matures and there's less inefficiencies. But I am holding a substantial chunk of cash in my entire portfolio. Okay, so now let's get into the updates on the strategy, as well as new positions I'm going to be adding and sort of how I'm navigating this market sell-off. So I'm going to go over to CoinMarketCap here and look at our market cycle indicators, which are going to show us a similar thing to the MVRV that we're looking for, as well as show us our logarithmic chart of Bitcoin, which can show us our buy and sell indications off of historical data. The one thing that I pay attention to most, and if you take anything out of this video, I think that this is the most important. These highs have been diminishing as the market matures in crypto. What hasn't changed much is being able to anticipate these low levels, which signal out the market lows. Even though these have been diminishing, these have stayed approximately in the same range. So being able to identify good areas to buy is substantially more important than trying to time the exact top, considering that there's asymmetry in the risk, and we we need to see massive amounts of adoption to see dramatic upside. That's sort of what everyone's speculating on in cryptocurrency. What we see here is a logarithmic chart of Bitcoin. Logarithmic chart is a way of looking at really large changes in data and be able to see in a presentable way that's actually effective and doesn't just look like a crazy parabola. All right, and what we've noticed is even though these top levels have been hitting lower and lower band levels, this blue level has been hit or slightly dipped underneath at the cycle lows. Okay, and all of this analysis is going to come together, which is going to conclude my strategy where I'll be setting up all my new positions and where I actually have dip buy orders currently. So right now, Bitcoin's price is fairly close to entering this blue band here. Now, historically, we've had about a 10% decrease in dip severity after each halving cycle. So we have about 85 here, 78 here, and sort of following that same logic, say we come in around 65, that's putting Bitcoin at about 45,000. Okay, additionally, we've seen the low of the current cycle be slightly at or above the high of the previous one. So if we look at the high in 2013, the low of the 2018 came in right here. If we look at the high of this cycle, the low in 2022 came in right around that high level. So what I use for the previous cycle to be able to dictate cycle highs is something called Elliott wave theory. Okay, and this is going to tie into the macro conclusion that I have. Elliott wave theory suggests that trends move in 1, 2, 3, 4, 5 wave patterns that are preceded by an A, B, C correction. There's a few rules about this, but one of the most important ones is that 4 cannot pass 1 and tends to go to that level. And then we can actually take what's called a trend-based fib extension from the beginning of our trend move up to the high of 1. So that's sort of that first push in the trend, which we've seen in the next cycle here. And we can also see in this diagram, multiplied by the golden ratio, which is our Fibonacci value, can give us ideas of where our potential 5 wave could be. In this rule, markets tend to correct from the low point to the high down to this golden 61.8 retracement level. And that tends to be where the bottom of the C wave can be. If I use this fib retracement up to the 261.8 projection, which the high of 5 can either be 161.8, 261.8, or 361.8, that would put the 61.8 exactly at where 1 in 4 joins, as well as the high of the previous cycle. This is actually good because the math roughly comes out to the same exact thing, and it doesn't change things all that much if the market is to have a response off of one of these areas and continue moving higher, or if we continue to drop from this point. Because if we go out the average duration of bear cycles, that's going to put us into September of 2026. So this chart only goes up to July, but if we go out to that area, the lowest part on the band is about $75,000. So a little bit underneath it would be in that sort of 75 to 60K. If the market wants to drop into the blue range, say within the next month or so, that's going to put us into that 60 and 75K area anyways. Sort of putting all of that logic together, the fact that the high of the previous cycle tends to be the low of the new one, that would put us right into this consolidation range here between $60,000 and $75,000, where price really exploded out of and consolidated all along here. Okay, that would also put us into the lower band of our cycle indicator. Whether that happens over the next month or two, or it takes a full year to do this, I'm going to be following the same plan where I'm not contributing to the altcoins. I'll be continually buying into the market. I just bought another Bitcoin here yesterday to be able to take advantage if the market explodes at any time, or it does extend further and go up to that 261.8 level. And if it continues to drop right now, or by September of next year, I'm going to have heavy dip buys just for Bitcoin in here. And if this cycle duration seems to be playing out, if and when this happens, this is when I'm going to be deploying the casino reserves to be able to take advantage of that next leg up. But ultimately, whether the market moves up to this level and then back down, or down right now, the game plan basically stays exactly the same and allows us to play into that upside. So my positions are going to be all based around this, and based off of the price action. Ideally, if this wants to cascade sell-off, I would love to enter into here. Once again, gradually be contributing to that core portfolio. I'm revamping the entire Discord right now to simplify it so I can update you on this type of analysis completely for free. Obviously, I'm going to go into more detail with the private side of our trading team, but I'm going to be updating this analysis as well as the new allocations for when the cycle plays out for us to allocate into the casino portfolio. And I'll be updating that in the Discord, which you can find in the description with the other resources. Most people don't make crypto videos when things are going down. I want to share this information with you guys because it's been able to transform my life. If you found it interesting at the very least, make sure you like the video, subscribe to the channel if you like trading and investing. As promised, I'll put this video here. I'll see you in the Discord. Until next time, I'll see you all in the next video.